Good afternoon, everybody. I'm Pierre Roberge, the Daily Trader. It is June 4th, and we are going to take a look at the many stocks that my members have suggested me to look at. And this video is available to the public, so even if you are not a member of this channel, you can look at the stocks that my members wanted me to check up. If you want me right now to analyze some of these videos, then I will require a $20 tip per stock just to make it even and fair for my members who are paying me monthly. So let's go ahead right now. So these are the stocks that we are going to look today. And Tesla, no, is not one of them because I do Tesla every single day for free. So let's look at SPY. Let's look at SPY right here. So like many other indices, you know, we are in a bad channel, a downward channel. So stocks and indices are in a downtrend, and they have been in a downtrend. You know, in hindsight, the downtrend started January 4th. But at that point in time, we were still in an upward channel. We started breaking outside of the upward channel on January 20th. But then this is making sense. We always have in technical analysis multiple patterns at the same time. So this is an uptrend right here. And at the same time, we started that downtrend at the same time as when we were in this uptrend. So right now, SPY, like many of these indices, we are in a downtrend. So this is the downtrend. So until we break this red line above, we are still in a downtrend. But within that downtrend, we are pulling back a little bit, bouncing on support. So when we are in a channel, we zigzag like this. So nothing new here. So right now we are in this zigzagging part. So we came down and now we are coming up a little bit. So if you want to learn about technical analysis, and if you read somewhere, there are different patterns that we can identify. You know, we have the W pattern, which is right here. This is a nice W pattern. And when you have a W pattern, you need the buy signal comes as soon as the stock breaks the middle part of the W, which is this part here, which SPY has done. And on this channel, we also like when stochastic is over 60 with a 21-day stochastic. So we like that here. So so we are bouncing. And let me just do another line here and just do another line here. So if we break this this inner channel line, let me just select the right tool here, highlighter. Yeah. So if we break this here, because this is a slope, this is the downward slope that we are in right now, you know. April 5th, we touched this, we touched that slope also April 22nd, and maybe we are going to touch it again. So it's entirely possible that our bounce right here lasts until this resistance right here. So be very careful when we are going to get close to this 420 mark. I cannot give you an exact number because this is a descending resistance. So depending on when we are going to do the candles to reach it, it might be 417, it might be 426. I cannot be more precise than how many candles we have to reach this, or how many days we take to reach this. But until we break this downward resistance, we should be doing something like this. If we break this, then we have this other resistance that we need to contend with. So we are nowhere near an uptrend. We are in a, I would even call it a double downtrend. We have this first downtrend here, we have this second one right here. So yes, you can catch a little bit of profit on the upside. You know, if you are trading, you can catch a profit on the upside a little bit until this point here. And if you're lucky, it crosses this and you stay in and you can go up to this. Profit is profit. Stochastic is great. So just be mindful of that. Greetings from Petersburg, St. Petersburg. Greetings to you too. So that's it for SPY. Let's look at Upstart Holding. Upstart Holding. Okay, so we have been looking at that one. So it keeps breaking resistance, but you know it's not really going up. You know, here it was going sideways and then it started descending again. Faked people a little bit here, and now let me make sure that I adjust this line. I think the line was okay. So it seems like it wants to break it, but it's not breaking it. So until it breaks it, it's not breaking it. So this is a binary thing. It breaks it or it does not. And if you notice, each time it goes down, it does a little bit of an uptrend. You know, this is a little bit of an uptrend. This is a little bit of an uptrend. And this can get people thinking, oh, it's not going up, it's reversing. Yes, it's reversing until it does not reverse because it breaks because it does not break this. So don't get caught here when things go back up and go back up and go back up. That's not what counts. You can profit from this if you go on the 1 hour chart, but you know, personally, this is not financial advice. Nothing here is financial advice, but personally, I would not put much faith into this yet because first, it has not broken the line, and second, stochastic is not over 60. So to me, it's just a wait and see again. Okay, is that the right stock? SOXL. Let me just make sure that I'm using the right stock. So these are the posts where I ask my members to suggest me stocks for me to analyze. Ah yeah, SOXL. Okay, sorry. So SOXL, this is the first time that we take a look at it. Let me just backtrack a bit to understand what's going on with this one here. There was a top at some point right here. Look at this double top. Looks pretty good. Looks pretty good. We came below, and now it seems like we want to come back above a little bit here. So in terms of resistance, you know, we have this that's already broken, so I don't need to draw that one. We have this here that's about to be broken. Well, I say about, but it's really, it has been broken. So when a downward resistance has been broken, that's, you know, this is telling us that the stock is not going lower anymore. So the stock is not going lower anymore. Then what can happen is that the stock can go sideways. So we need to make the line. We need to make our congestion line, congestion zone resistance, which I just did. So we are right now into a congestion zone. So we could be, so two things can happen. We can just start to go up like this, or we can go up a little bit and start in this congestion zone. The thing that's good with this one here is that stochastic is over 60, so this is a good sign. So to me, if I wanted to invest in that company, if I wanted to invest in that, I would take the chance right now because stochastic is decent, is over 60, and I would put maybe a stop at 21.97. There's a little bit of support here, so I would put a stop at 21.85, let's say, and I would wait and see what's happening with this. It's possible that it goes up to that resistance, and let me tell you what's that number. The number is 28. 28. And we are going to put that number in red because it's a resistance. So stochastic is good. So when stochastic is good, I am personally inclined into entering, unless there's a very close resistance there. But so far, you know, it could go from 24.69 to 28, and it could do this. At what point you can sell it, you can sell here and pocket a little bit of profit, or if you're lucky, it can cross 28. You make your own decisions. I'm not making decisions for you guys. Blackberry, yeah, it used to be a great company, yeah. Used to be the leader, but then Apple came. So, you know, there's a big resistance and support at 586, I would say. And in terms of diagonals, this is the diagonal that we have right now. You know, it's having a hard time breaking for good. It broke outside of it on May 27th, then came back. Then tried again Thursday, and then came back. So very, very close to doing something. Stochastic is very close to being over 60. And so this one is looking pretty good, actually. This one is looking pretty good. And you have earnings call soon, and this company seems to be, wow, seems to be having great earnings, huh? And this just goes to show that if you don't look at technical analysis, you could have bought right here on March 31st. You could have bought right here because of these great numbers and surprises, and that would have been a mistake because the stock kept going down, because we were in a downtrend. So don't buy a stock in a downtrend. Just that is going to save you a lot of money. Don't buy a stock in a downtrend. That's simple enough. Simple enough. You will save so much money. Then catching a stock when it starts to go up, then that's another story. So we have stochastic almost good. So you know, this one I think is not too far from you know, I would consider buying this one myself. I would consider it. I'm just trying to show you the different resistance that we might encounter. So if you want to be a bit more sure, you can wait until 653 just to be a bit more sure, because stocks can sometimes just do something like this. And this is really hard on you know, on the emotions. So if you want to avoid that, you just wait a little bit higher. So there's a bit of resistance right here at 653. So once it hits 653, that's a little bit safer. But you know, I would for my own money, I would not mind risking it right now. But you make your own decisions, because we each have our own financial situation and risk aversion. This is why I never tell you when to buy and when to sell exactly. I'm telling you the pros and the cons, and you make your decisions, because that way you learn how to fish, and then you become independent, and then I lose a subscriber. So Teleduck Health. Okay, this is the first time that we are looking at this one. Yeah, I'm just trying to see what's the best way to see what's going on with this. There's a very steep kind of thing here. Yeah, that seems to fit the bill, huh? If it fits, you know, if you draw a line and it fits in several places, that's a good line. And you know, it fit here, of course. I started there. It fits here because, yeah, that's the second point. So of course it's going to fit it. But then look at how it fits here. This is this is playing with our emotions, you know. It's crossing, it's not crossing, it's crossing, it's not crossing. So there's something there. There is something there. When it does something like that and breaks a resistance and comes back very often, what you can do is that you can do this. And this is kind of a double a double resistance. So sometimes it stops at the first one, sometimes it stops at the second one, and that's confusing us. So when this happens, I do a double resistance like this, and I wait for the second one to be broken. But you know, I like this here. I like this here. I like when his stock crosses stochastic over 60, especially when it does it before crossing a resistance and before going quite high. So it's still quite low compared to May 3rd. So I like to have a nice stochastic before you know, before any crossing. If you want to be just a bit sure on, you know, if you want to be on the safe side, what I would do is that I would wait for 40, 43. So I would wait for the perfect storm. You know, 40, 43 is broken. These two resistance are broken, and stochastic is already above 60. So that would be a nice entry somewhere in that area. So that's it for Teleduck. Nvidia. Nvidia. Yeah, see, downward resistance. It's still underneath it, but we have a nice stochastic. So so this could be nice once it breaks this resistance. And when a stock breaks a resistance, you can wait for 1 or 2 days outside of that resistance. That's your choice, depending on the stock. If it's a volatile stock, I don't chance it. I usually go in after only one candle outside. Sometimes I get burned, but if I get burned and the stock comes back, I just sell, and I lost just a little bit, and I wait for a better time. But I am in when it goes far, and all of these little losses are you know, pale in comparison to the actual profit that are made when the stock really starts to go. So yeah, so this is nice. So yeah, this is a decent stochastic at 72. Just wait until it breaks this, and then it should be doing a pullback at some point, because this is quite steep. You know, this is quite steep, and stocks don't move that steep for a long time. So they usually have a smaller slope, around 45 degrees approximately. Well, stocks tend to do a 90 degree from this one to this one. They tend to do a 90, but so I don't know, maybe this one is close to 90, but I would just be careful about that. So maybe it's gonna go something like this and bounce on something, and then you have your support and you can ride it for maybe a long time. That's what we hope to do all the time. Okay, for the 1 hour, once stochastic pass 60, is it always a green light, or should you check to go the 30 minute and see if the stock? No. If you want to trade the 1 hour chart, okay, you wait for a stochastic over 60 on the 1 hour chart. You check for the resistance that are not too close, because then it's just maybe a small move. So if you want a bigger move, you wait for a cross of resistance at the same time. It does not really matter what happens in the smaller time frame of 30 minutes, but it's nicer to get the higher time frame stochastic not too low. Maybe over 60, that would be the best case scenario. So it, you know, I cannot tell you something for sure, because it's always risk. You know, it's always a risk thing. Every trade is risky. No trade is 100% sure. No one. So you need to know that. So, but to answer your question, no, you don't need to wait for the 30-minute chart. What is the rule of thumb for hourly trading? Like you mentioned on the daily, one can wait 2 days to confirm to the move once the stock is above. Yeah, this is one way of doing it. So on the, well, first you need to pick a time frame. Do you want to trade on the hourly chart, or do you want to trade on the daily chart? If you want to trade on the daily chart, you should not look too much at the hourly chart, you know, because hourly it could go up for a couple of hours and it could go down for a couple of hours, and then you would sell if you now look at the 1 hour chart, but then the next day it can still pick up. So if you trade on the daily, you trade on the daily, and then you should not really look at it during the day, because it might impact what you see on the daily. So you need to really pick one. Okay, so that's the Nvidia here. So so it has not broken resistance yet, so at least I would wait for that. It's very close to do it though. There you go. AMD. Again, you know, this is a nice move here. You know, this is a nice move. A very jagged move though. Very jagged move. Very jagged move. But it has not broken your resistance yet, because, you know, it had nice moves here. Nice move, nice move. Almost nice move. Almost nice move. Nice move. Yeah, okay. So these smaller moves, it's harder to pick them up on the daily chart because they are too small here. Because, you know, stochastic was not over 60 really at the beginning of the move. Here you're starting to have stochastic over 60, you know, but then it comes out, it comes in, it comes out. But it's still under this resistance, so this is still a downtrend. So chances are that it's gonna still go down. So we de-risk trades when we wait until resistance. When we wait until resistance is broken. This is how we de-risk things. So right now, even though the stochastic is great, the resistance is more important than stochastic. My pleasure. That's for AMD. QQQ. Okay, so yeah, this is, let me just do this. So everything is in, well, almost everything is in a downtrend. So not much to do. If you want to go long, then it's a little bit just too bad. So here I'm going to do a double support, because sometimes it stops right here and sometimes it stops lower. So the same thing. Well, this is basically an index, the QQQ. So so the same thing as the Dow Jones and all of the others. So they are in a downtrend, and they have been for a while, and now they are bouncing a little bit. This one, you know, this one is a little bit nicer than the other one because it broke this downward resistance that was part of this downtrend. So this is good. This is good. This is a nice move. Stochastic is close to 60 to 60. You could chance it if you want to, because stochastic is pretty good. So you could chance it. And if you chance it, then be careful about this one here. And then because it should go down, because we are in a downtrend. If it crosses, then the downtrend stops. And then that's a different story. Wejo. Okay, Wejo, we looked at it in the past. Yeah, it does not want to start. And stochastic is not even very high. It's at 24. And yeah, this was looking good right here, right? It was looking good, but stochastic was not very nice. And you see what happened? This nice move led to nothing. Without stochastic, a stock does not move much. And now, yeah, so now at 221, you know, it's still stuck at 221. It cannot break 221. And here, this is the support right here. So nice congestion zone. It's doing nothing. Boring. Dow, we do this every single day, almost every single day. So let me switch to my other watch list. Same thing as QQQ. It was a hard day Friday. It was a really hard day Friday, but it's still in an okay position. Stochastic is still at 70, which is over 60. For those that are not good in math, this is just a joke. So, so yeah, there's a possibility that we go back to here. So, you know, we could go up to 34,000. That's possible because of our stochastic. So I have a homework for you guys. Look at many stocks. Pick any stock. And well, okay, this one is ugly, but look at any stock and look at what's happening when stochastic is over 60. Look at what's happening. Just look. So this is in a downtrend. So that's one thing, but look for uptrends also. So look for stocks in the past that have been in an uptrend. So you will find that in an uptrend, you know, stochastic is there a lot. Stochastic is there a lot. We sometimes lose it, but when we lose it, we don't get scared because we have a support line that tells us, no. Even if we lost stochastic, if we keep support, we stay in. And when you have both support and stochastic, then this is a lot easier to stay in a stock and catch a good ride. So that's your homework for this week. Do you recommend to buy at support even when stochastic is below, or buy at resistance when stochastic? I noticed that there are money that could be made on the way. Yes, exactly. Well, you can do either one. So it's perfectly legitimate to buy on support. It's perfectly legitimate to buy on support. But then you might be ready to sell at resistance because it could not break resistance. So it's perfectly legitimate to buy on support. You know, like Tesla did here, you know, May 2021. See, we had identified that support very early on, and it lasted for 2 years. That support lasted for 2 years. And then you could buy, you know, at support. Each time it touched support, it came back to it. You could have bought. But it stopped at resistance and came back. But that's fine. You know, you could buy it here and sell it when it goes to resistance and wait until it falls back. You can buy it here, goes to here. You can buy it here, goes to here. Or if you believe in the company and you want to keep it for a little bit longer and not see all of those stochastic below 60, then you can go on the weekly chart. And the weekly chart, okay, let me see. So the weekly chart was right here. So with the weekly chart, the same support was valid. So you could have gone to, you know, you could have started, so here you did not have stochastic over 60. So you could have bought here, that would have been fine. It turned out fine. But if you had waited for stochastic, then you could have bought here at 657. And then because it's the weekly chart, then you don't get all of the choppiness that you see on the daily chart. So you can decide, and that's a big story, but you can decide on which time frame you want to trade based on the choppiness. You know, if it's really choppy and it would make you come out of the stock because you are too afraid, just go higher. And here there's no choppiness. You know, the stochastic went over 60 right here and it lasted a long time. And when you enter, when stochastic is over 60, you don't need to sell when stochastic goes below 60. You could sell and you would have sold at 900 and bought maybe at 620 something. You can sell at any point. So the selling point does not need to have the same criteria as the entry point. So you can enter with stochastic, blah, 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 and breaking of resistance. And then you can sell when things go super high, super fast. So here, you know, the stock was going at this speed, and then stock was going at a faster speed, a second speed, let's say, and then the third speed, and then the fourth speed. So when a stock, you know, fourth speed was approximately here. So when a stock changes speed like this, 1, 2, you know, first slope, second slope, third slope, and fourth slope, then you know, you can cash in. You can cash in. You can cash in. And if you want to be a bit more precise, let's say that you have been here since July 26th. It's been going well. It's above support. Stochastic is over 60, so you are not scared. This is easy to stay in. And then it starts to go crazy like this. And now you don't know anymore. So if you don't know anymore, well, it has gone so far. Should I sell here? So you can see if it has reached a resistance, and indeed it had. So that was your first indication. Like, well, sorry, the first indication was the different slopes, you know, first speed, second speed, third speed, blah blah blah. This is the first indication. The second indication is that, well, we are touching resistance. So, but we broke that resistance. So maybe we can still stay in it. So if you want a bit more precision, then you can go on the daily chart. You can go on the daily chart and then you get more precision. So on the daily chart, you can see that, okay, it's breaking here, and you can see that stochastic is at 97. The next day, stochastic at 95. And then right here, stochastic at 82. Then you can really start looking at it and say, okay, this is zigzagging a little bit. You can set yourself a point and say, if it goes below 11.16, I'm gonna go out. So you can dip into a smaller time frame once you have already made your decision on your trading time frame. So you decided to trade on the weekly chart, and here you are thinking about selling, but you don't want to sell too soon, because what if it continues to go higher and then you are sorry. So what I do, and I'm repeating myself, so what I do is that I go on the, so I decided here that I might want to sell, you know, I bought in at 600, then now I've doubled my money. I might want to sell. So I might want to sell. This is what I have in my mind. I might want to sell, but here, waiting a week to know what's going to happen, then I'm going to, you know, I might be selling at 1,032. And that's a big gap. So if I don't want to wait for one full candle, then I decided I want to sell. I go on the daily chart, and then I get a bit more precise. Where is it? Okay, here. So I get a bit more precise right here. I go here and I say, okay, stochastic is still good. I'm gonna stay in it. This is a drop. That's fine. That's fine. Stocks Stocks go up and down in zigzag. That's fine. Stochastic is at 82. That's fine. But then at that point, you know, here it went super down super fast and stochastic became below 50. So at that point, you can just say, I'm going to sell below. You pick a line, you pick a support. So here it started to look like support. You know, we have this that touched 1116. So you know, 1116 was used as resistance here. It was used as support here. And then it went like this and it went like this. So now, now it's starting to look like something like this. And then you can say, well, okay, if it breaks 1116 during the day, I'm going to sell. And you can even go into the hour. And then once it broke, you know, if we go on the hour, you know, this is how we see it here. Is that it here? No, sorry, it's this one here. So yeah, so then you can see at 1116, I think 1116 is right here. So you can say, okay, 1116 is my target on the daily because I decided to sell on the weekly. And then you look at what's happening, and then you see on the hourly chart that you lose stochastic below 60. So like, oh, okay. It can still get caught by 1116. It can still bounce on 1116. But then I think this was the first hour of the day. Yeah, the first hour of the day, it started to go down like this and started to break it. So then you could decide at this point, okay, thank you very much. I have my 1116 here. I did not have to wait one full day. I waited only one candle, which is an hour. So this is telling me that let me see. This is telling me this is that it? Yeah. So this is making me come out of this here at 1116 or just a bit below, and effectively I sold at 1116, which is right here on the weekly, without having to wait for the whole candle. So you know, doing all of this work, this takes work. This takes a lot of work, but you save this, you know, because you sold here instead of selling here. Okay, sorry, this took a long time. This took a long time. Yeah, so did we do Dow Jones? Yes, we went there and we did it there. So yeah, there's nothing more to say. We have stochastics, so this is great. So in theory, we should be going up to that resistance. So thank you very much, guys. So thank you very much for watching. Thank you for my members for membering me, and I'm gonna wish you a great rest of the weekend. It is Saturday, and we are doing a Tesla and Palantir video every single day of the week, and this is completely free, so you can join us to watch that. So thank you again, guys. Thank you for interacting with me and asking me questions. This is always nice because this is how I can you know, get stuff out of my head. So I hope this is helping you, and this is also helping me being more clear. So this is challenging me in expressing myself better, so I appreciate it. So thank you very much, and I'm gonna tell you à la prochaine.